you don't have to get too far ahead. I think we've now seen, like with Kathy Wood, it's fun to talk about 10 or 20 years, but let's be honest, investors don't have that patience, especially public market investors, because they're inundated with news about how their neighbor is doing and how your neighbor's fund is doing. So I think great, if you want to try and pick stocks, right? You've got to try and pick companies that are both making money and that have catalysts for growth, because otherwise you're not going to stay with your company.
Hello, people of the degenerate economy. Howard Lindzen here. If you're looking for great investment and trade ideas from the StockTwits community, be sure to check out our newest newsletter, Chart Art. Every day you will get a free list of 5 to 10 easily digestible ideas you can quickly click through and follow up on, even with the person that shared the idea. Take our email that went out April 22nd, where we highlighted Kava. This stock is up 57% since the email. Or Arista Networks, which we shared on April 24th and is up 39% since. We have dozens of these that have been big winners already for our community. Be sure to go to chartart.stocktwits.com or check the link in the show notes to get the free daily email.
Hello, everybody. Welcome to Trends with Friends. Michael is wearing Meta glasses today. And what's the deal with Meta and Luxottica?
So the story is that Facebook Meta is lining up to buy 5% of Luxottica, which is the largest maker of iframes in the world. Most of the glasses we all wear are made by them in China. And recently there were rumblings that the other big tech companies were trying to invest or buy a piece of Luxottica because they also want to put AI into the glasses. Meta, these are the smart Ray-Bans from Meta. And the reason I've got them on today is because Meta just released their biggest open source model, the Llama 3 3.1, 405 billion parameters. So I'm wearing the biggest open source large language model on my head. I can say...
That's breaking news.
Exactly. So I thought that would be...
Here's how breaking news that is. It's that I wore those last year or just before the war broke up. I was in Israel September. I was wearing them on the beach. They were fantastic then. They're just not... They're smart glasses, but they're not so smart, meaning that the Ray-Ban brand, even though it's owned by Luxottica, people should know Luxottica is like an original roll-up model, right? Another great Italian company.
Is that a Degenerate company?
It's not in my Degenerate index, but what makes Luxottica interesting, they're kind of like a monopoly. There's the reasons why that American company, the Warby Parker, started, because basically every brand that you buy that you walk into a sunglass hut is Luxottica. So they were one of the original roll-ups in their private company. And shout out to Italy, because even though it's a fucked up place, you got Ferrari, you got Luxottica, you got B&B Furniture. You have some of the greatest brands in the world in that country. But kudos to Facebook, because you're never going to wear Facebook glasses. You're never going to wear Snapchat glasses. You never were going to wear Motorola glasses. And by the way, Oakley was smart. They sold to Luxottica because the only way I always thought Oakley was going to be one of the first companies that did this, because they had glasses that people like to wear, and they used to have this little Motorola Bluetooth, but Oakley didn't know how to sell them. So fast forward 20 years, Facebook open sources LLM. So they could really build maps and music and everything. They could end around a lot of people with this fashion meets technology. Where what you're wearing is fashology.
It is fashology. It is part of Degenerate economy.
It is part of Degenerate, and that's me add Facebook to my Degenerate index, because this is fashology. You will not get embarrassed wearing Ray-Ban technology. But if Facebook launched a pair of glasses, you would not wear them. Well, you might, Mike, just because you're a geek, but I'm saying... kids. What was the price point on these?
These are
What's
about
the price
300, and they're sold out because a lot of the kids want them in different colors. I like them in basic black, and they come in different size. But the cool thing is,
home run.
Yeah,
product.
and they just announced their Meta AI, which competes with ChatGPT, and now you can access that with these. So you can be looking at anything and say, "Hey, Meta AI, what is this building I'm looking at?" And if you look at what Google, Apple, everyone is introducing, are multimodal AIs, which you take your camera on your phone and point it at things. And that's pretty awkward. The logical place for cameras is in regular glasses, not those Vision Pro things. And so that's why Meta is ahead of the curve with this thing. And everyone else is trying to figure out how to get regular glasses again. They can put electronics into it. Apple is rumored to be thinking about putting a camera into their AirPod Pros, the kind that Phil is wearing. So the next model or the model after that in the near will have a little camera, theoretically, in your AirPod Pro that will look at the world. And because the reason for that is that's a sensor. And then it allows these things to take a look at what's around you and then help bring AI to bear to explain to you what you're looking at, what you should be doing in terms of going navigation-wise, those kinds of things.
All I need is a little headpiece,
like those,
something in my ear to remind me what I'm supposed to be doing, because I just forget. Like I'll come downstairs, I'm like, okay, I'm going to make dinner. And then 5 minutes later, I'm like doing something completely different. It's like, hey, Phil, make dinner, bro. Like if I had that, that's all I need in the world.
Michael, when are we getting the chip? When are we getting the chip? I don't want to wear anything. Can you just stick it in?
There are already half a dozen plus startups that are doing just what you're asking for. They don't want to put chips anymore in your brain like Neuralink, Elon's Neuralink. There are now companies that are trying to create things that are chip-based, AI chip-based, that you kind of wear around you discreetly. Humane's AI pin was a step in that direction, but it didn't work for a bunch of reasons. And there are a lot of startups that are trying to figure this. So enhancement with chips that you wear with cameras that look at stuff is the next thing. And there aren't too many places you can put a camera discreetly around you other than glasses. So that's why, these
You'll
things
wear
are
that,
important.
JC?
If they do the nose ring version, I'll do that one.
So Phil, I'll let you take it away here. We jump right into this. I think we should deal with the elephant in the room. Last week we said it was a shitstorm. It never been said on financial television, but been a shitstorm for bears. We kind of topped it, or you kind of topped it with that funny line. Tech has been in retreat for about a week. And so the bears are having a little fun. Tesla's earnings week. But you can see the jockeying. When Michael started joining us, he was wearing the Apple Vision Pro. And Mike, you can immediately see that this is a better form factor for, obviously you're not going to watch movies from this, but theoretically this could lead to a sister product for airplanes that could do that. You know what I mean? So I don't know. So kudos to Facebook on this. I originally, when I saw them do this Ray-Ban deal, a couple of deals ago, years ago, and by the way, smart, 5%, FTC can't get in the way of that. That's just play money. It's just a made-up number that Facebook is going to give Ray-Ban. And it's probably some kind of exclusive where they can't go take an investment from, right? Like, that's better than owning the company, right? Luxottica gets a couple $100 million or $1 billion for play money, and they got a secret pact not to license any of the other 100 Luxottica brands. So I guess you would go down the line now and try and find who Google or somebody's going to buy to get into this business. So there's going to have to be another big name brand, and Oakley's already owned by Luxottica. So interesting. There's a lot of chess.
It is a chess move.
And Phil.
So JC, to Howie's point about the correction and the shitstorm for the bears, we're down 7% on the Qs, but only 2% on the Dow, or where are we in terms of corrections?
I mean, listen, you're seeing the rotation. I mean, some things are correcting, others are making new highs, right? Look at regional banks making new multi-year highs literally as we're recording this. So it's not so much like the market is correcting. This is what happens in bull markets. I'll point you to the chart here that I brought along with me. It's the first chart where we're looking at technology relative to the S&P 500, just now got back to those March of 2000 highs. It only took them 24 years, but now here we are again. So it's the old question that we ask. Does the market have so much memory that something that happened 24 years ago is now going to have a role in the coming quarters and even years potentially for technology? Is that 30-something% weighting in the S&P 500 for technology? Was that the high, right? There are a lot of implications here to technology as a whole. In an environment like we're seeing currently, where technology is underperforming, the market's holding up pretty well, you know, I think that there's a really high likelihood that moving forward, the market does well, and those mega cap technology stocks have a hard time keeping up with a lot of the other things that are doing well in this market. Doesn't mean that they won't go up. They just won't go up as fast as a lot of the other things. You're seeing it this week. You saw it last week. I think there's a high chance that continues.
By the way, that chart, that first peak with the red arrow on the left, that was March of 2000, the top of the internet bubble, and the NASDAQ proceeded to fall from 5,000 to 1,100. Just to play, bear's advocate here.
No, fair enough. No, just as a reminder to those who might not be familiar with that, yes, what Phil is describing is the dot-com bubble crash. Where that crash began is exactly where we are today, like literally to the penny.
As someone.
And at that time, I remember those days. Michael will remember those days because he was an investor in thestreet.com. We lost Michael you were an investor in thestreet.com, weren't you?
We took Goldman.
Right?
Goldman
like
took
he was
it public
with Fred Wilson back in the day.
Yes.
Had a great IPO though.
So Goldman took great IPO, went to like 1,000 or something. So this is why it's great to have Michael here for a little history. That's how I met Michael, through Fred Wilson. Fred Wilson introduced me to Michael. That's how old we are. And Fred was CEO of Street.com for like an hour. Like that's little known fact that like after everybody got fired at that place. But Street.com, I don't know if you remember this, Phil. Jim Cramer did this speech where he put together this list of 20
leaders of the new world,
that were the future of tech.
March of 2000. It's still on the internet.
I don't think one of those companies, that was like the Chamath SPAC moment, right? It was like Cramer 1.0, which is why I call Chamath Cramer 2.0, was he literally walked into a major hedge fund conference naming, I think I should know some of these names. Phil's looking it up. Oh my God, they all went to zero. Go ahead.
I mean, I lived there. I was head of Goldman Internet Research at the time. And the key thing, a couple of things I just want to make a note on. That time frame, 2000, 2001, the total number of people on the internet around the world was maybe 200 million. You had to stretch it. Today, it's Facebook Meta we were talking about has 2 billion alone. Apple alone has 2.5 billion alone. So we've just got to keep in mind that the markets are 10x bigger that are applicable, on which you can build all these things on. Number one. Number two, that point in time obviously was also the Fed had done 2 or 3 major rate increases, and now we're on we've gone through our rate increases and we're on the cusp of potentially rate decreases, et cetera. And then we can talk about the big tech themselves that are all doing amazing things on AI and technology.
No. Absolutely. It's just pulling back that chart, if we can, that JC pulled up, because history rhymes, is that I remember that era. And even I had so little experience in the market. Maybe I had 10 years experience when I was calling bubble and making fun of Cramer, because I loved Cramer up until 1999. I thought he was fucking genius. And what made that era different is I even thought it was a bubble, right? Like when I hear people talking about a bubble right now, like I threw out last week the 9 times sales on Apple, but the companies that Cramer pulled up, what were they? They're so funny.
InfoSpace, Exodus, Digital Island, Ariba, 724 Solutions, Mercury Interactive,
Oh my
Inktomi, remember that one?
I took that
Inc.
public.
to
I mean,
me,
it was
yeah.
Inc. to me was the technology search company that redid search fundamentally before Google redid it in '98. So I mean, this is the old folks show today so far. So, but what I'm trying to, I think. Go ahead, Bill.
So let's bring it to the present, right? Let's bring it right down to the present, and we have this tweet from who put that thing out? Gary Marcus. And basically he's saying OpenAI may lose $5 billion this year and may run out of cash in 12 months unless they raise more money per analysis at the information. Always a pretty solid source.
So Phil brought up this article, so I'll say it. The information, which is pretty, I've met her. I know her in less than I subscribe to the information. I'll say it. I'm in this camp. I'm in this camp. I don't trust Sam as far as I can throw. I don't like Thrive. I don't have a reason not to personally like Thrive. I just don't like the brand. I don't like the deals they do. I don't like the valuations. Putting all that aside, this is pretty interesting as it compares to the chart that you brought up in 2001. So if we were to pull up the chart that we're pulling up, XLK versus the original chart, what makes this bubble different or world different is there's mini bubbles. When you went from 200 million internet users, this is why it's not a bubble. But OpenAI can be a bubble. Like there can be, or not, AI itself can be in some form of bubble. That is is one part of what that we could have 88% drawdowns in categories. We probably had a 60% drawdown in SaaS. So we can have an 80% drawdown in some tech companies right now. And QQQs could still be making or staying at all-time highs. That's how diverse, the NASDAQ is right now. It's not 2000. But when you read articles about OpenAI losing $5 billion a year, that's not a little bit of money, right? And so there's going to have to be some boys becoming men stepping up.
And that's a key point. One of the reasons OpenAI's costs and Anthropic's costs, and that's a very good article, are so high, is that for the first time in this AI tech wave versus previous tech wave, the costs of rolling out software are variable. What does that mean? That means every time 100 million people, 1 billion people actually do things with AI, there is a variable cost to it. The costs go up. The inference costs go up. We did not have in the PC cycle and in the internet cycle. When you bought a copy of Microsoft Excel, you didn't. If you used it 5 billion%, the cost of to Microsoft did not go up. It cost them just X to make it and distribute it to you, and that was it. There's variable cost. AI has variable costs, and that is what we're seeing. OpenAI is the biggest ChatGPT company, AI company. Their variable costs are higher, and that's a key piece to keep in mind.
Oh, so when I was doing software, you're saying when I would sell to Egghead and put my floppy disk or CD-ROM in the package and pay CompUSA and Cap and do my information booklet in 5 languages to appease the French and 2 other languages. There was your margin, but there was no variable cost. You sold it and that person could use it once. I guess you're saying because of the cloud and because everything's connected, there's variable.
And here, when you ask something on ChatGPT, there's a variable inference cost because every time you're asking it, huge amounts of NVIDIA chips have to be running, doing quadrillions of calculations a second. And that's on your text queries. The moment you start to do things with multimodal, with for photos and videos, like with these glasses, the costs go up even more as long as you run them in the cloud. And that is where Apple and companies like that have a big advantage. They're saying, we're going to take some of those inference costs and run them on the devices that people already buy. They're 2 billion iPhones and so on. We'll run the inference on these things. not on the very expensive AI data centers. And so the inference costs are going to be far lower on these things. So it reduces the variable cost piece of it. So it means that an OpenAI doesn't have to spend the billions it does now. It may be less. But that's where we are today. In the early days of AI, the variable costs of running AI inference is so high. The leading companies like OpenAI have $4 or $5 billion theoretically in losses. So
who fronts that? Is Microsoft? They just got to keep stepping up to the table.
Yes, Microsoft is basically providing OpenAI with hundreds of thousands of AI GPUs at discounted rates. This is part of that $10 billion that Microsoft is, quote, investing in OpenAI. That money is coming right back to pay for compute cycles on Microsoft Azure cloud data centers. And it's paying for that. And the article actually makes a good point that in the next year or so, the cost could double if OpenAI is successful with deals with Apple and so on. As they get more users, hundreds of millions of users doing queries, that processing costs go into Microsoft's pockets as revenue into Azure. So we need to understand the accounting. It's not just a cool headline that, hey, they're losing $5 billion. It's all connected, and over time those costs will come down a lot. They will come down a lot. Meaning, what's time? Over the next 3 years, 4 years, but over the next year or so, 2 years or so, it's an issue, and that's why the article says OpenAI probably needs to raise more capital, because they have a race to make sure they get as many users come onto their platform and get hooked on using ChatGPT and GPT-4 and then GPT-5 next year. They get hooked on it so that they don't go to the competitors. This is a market share run and rush.
Market share run. So like Facebook doing the Luxottica
Correct.
deal, they found a little hole in the system. That hole will get plugged. I think, Phil, we lost you, but I'll let you take back over. But to end this session, I would say breaking news. Be alert that JC quickly said we're still in a really fantastic bull market in terms of breadth and rotation. But just when you think it's all fun and games and it's a shitstorm for the bears, there's so much at stake that like breaking news is throwing around trillions of dollars of market cap overnight. Like I went from not liking Facebook at $200 to potentially loving it at $400. That's how much the game can change. And I've seen this in my own portfolio. At Customer, they paid $1 billion for Customer. This is about story when Facebook was going all in on e-commerce and the metaverse. They paid $1 billion for Customer, one of our portfolio companies, and the stock was probably $250. And I remember like arguing with the board; they wanted to pay in cash. The board was like, "No, we want Facebook stock." And I'm like, "What planet are you on? That cash, paying 50 times sales? We want cash." You know what I mean? So we ended up taking cash, and then Facebook completely dropped that business. Sold it back to the founders, for 20 cents on the dollar, but a year later. And Facebook stock is, even though they'll take a $800 million write-off on just one e-commerce deal, stock's 40%, 50%, 100% higher than it was at that time. At the scale at which these numbers are happening are insane, Michael. We're just insane.
Mind-boggling scale, way larger.
We've not seen this before.
.com bubble.
Yeah, we've not seen this before. Right,
okay,
Phil,
so let's move on. So the most interesting chart in the world, right? Most interesting chart in the world. Segment we go to, we drop, we go to, we're go-toing it now. We're go-toing it now. We're to-going it now. We're going to it now. JC, you have an entrance. So if tech is not going to be the thing, at least for the next few months until it comes back strong, if it does. And by the way, the market topped in July last year, bottomed in October. So we might get one of those kind of pullbacks. But if we go to JC's most interesting chart in the world, this financials, if it's not going to be tech for the next few months or for however long, what's going on with these different, what's going on here, JC?
So we don't have bull markets without financials. And if financials are leading the market higher, historically, is that a bad thing for stocks? Like, we haven't found that to be the case at all. So it's really more of a function of sector rotation. You've got large cap financials hitting new 52-week highs, mid cap financials hitting new 52-week highs, small cap financials, which is basically regional banks, all hitting new 52-week highs. And literally, as we speak, the NASDAQ 100 is down 3%, and the small cap financials ETF is up, and regional banks are up almost 1% on the day. So you're seeing that rotation come into play. Small caps in general have done very well. Look at biotechnology as well. It's an interest rate story. We thought it was. The market is just confirming that, yes, in fact, it was an interest rate story all along. So if interest rates are falling, that's good for small caps. It's good for biotechs. It's good for financials. Good for regional banks specifically. You're seeing that. You're seeing it globally as well. Look at something like Berkshire Hathaway. We sold puts today on Berkshire Hathaway, the 415s. And then you can listen, you guys do what you want. But for me, I like selling the puts naked. I'm good with that. But in this particular case, I like using that money. It's about $5 you're getting for the October 415s. To go out and buy the 455s, right? So in other words, use the money from the puts to buy out of the money calls. What are you getting in Berkshire Hathaway? Other than Uncle Warren, you're getting a lot of financials, a lot of insurance, a lot of industrials, 20% Apple, roughly, maybe a little less, maybe like 18% of that Berkshire Hathaway's Apple. So, if that's what you're interested in, I like that trade a lot. So that's how I'm playing it from an execution standpoint. And also, if you scroll down or go up to the Dow chart, Dow closed at all-time highs last week, right? Highest weekly close in the history of the Dow Jones Industrial Average. At the same time, you had more stocks in the New York Stock Exchange above their 200-day moving average than you have this entire bull market. So going back over 2 years when this bull market started, at no point has there been more stocks on the New York Stock Exchange above their 200-day moving average, which is just a lazy way of saying stocks in uptrends, right? Is there anything magical about the 200? It could be 201. It could be the 199-day moving average. It doesn't matter. Just a very good guideline as to, is the stock in an uptrend or not? Is it above the 200-day or not? And the most that we've seen, you know how many times that happened in 2021? Zero. The percentage of stocks on the New York Stock Exchange above their 200-day peaked at the end of 2020, and it was in decline all year throughout 2021. So keep that in mind.
Yeah, that goes. So great. Most interesting charts in the world. Good job. I think what JC is saying is right. There it is. I love that. So that's our most interesting chart in the world segment. JC gave a few. Mine. I'm gonna go with Solana and gold. Okay, because everything that I think about and everything that I invest in now is not whether we're in a bull or bear market. I don't even know what that means anymore. I'm 60 years old. I like making bets on things and trends. Everything that I see and think through is in the degenerate sense of the term. In my degenerate portfolio, I think we track it. It's up 73% in the last year. We'll share it in the notes. Phil, you've seen it. And I've made a bunch of changes in the last few weeks. And one that I've been thinking about is Facebook. I added Taser, Axon, which is more my, not so much, it's more like the act out part of this degeneracy world. The president was shot. Guns are going to be a big topic of discussion. But I think gold is a big topic of discussion because it's the it's the Warren Buffett proxy for bankruptcy. It's the Warren Buffett proxy for untrust and distrust. And right now, Elon was out yesterday saying America's bankrupt. Right? Like, again, everybody's allowed to say what they want. The guy owns Twitter and is the most community noted person on the site. Yet he's all in favor of free speech. But gold is not staying on the shelves at Costco. The Free Press of all places wrote a piece today about Costco running out of gold in their vending machines. So right now you have both parties saying, this goes to Ben Hunt's comment, you have both parties saying that if the other party wins, America's fucked. So if that's the commentary, gold and Bitcoin are my charts for the while. And you can see Bitcoin Bitcoin was technically perilous. And ever since, Biden dropped out of the race, Bitcoin's gone up because he was so polarized against Bitcoin that Kamala may come out and say, so now you have both parties both talking about the same thing indirectly, gold and Bitcoin. Two ways to play it. I threw Solana in there as my most interesting chart because it's kind of the fast, the degenerate version of Bitcoin. It's the one that kids are building the apps on. It's the one that kids are building the speculative meme coins on. And Solana looks fantastic. JC could probably pull up the chart. So for me, it's gold, Coinbase, Solana, and it's Bitcoin, because in a world where the election now is sort of the term where both sides are saying the other side were doomed. It seems like, that's an interesting chart there. So JC, you're saying wait for Solana to break out here probably, but Solana's on the verge of breaking out relative to Ethereum. That's interesting. Is that what you're saying there?
To me, what stands out the most has to be the ratio, the relative strength you're seeing against Ethereum. There's so much momentum here. What's really fascinating also, Ethereum ETF came out yesterday. Nobody gives a shit. Also, Solana is next, right? We've already gotten those filings. What's really fascinating here to me, and I'd love to hear your thoughts, is it was obvious Solana was coming after, it was obvious Ethereum was coming after Bitcoin. It was obvious Solana was coming after Ethereum. But what would be the fourth one? I have no idea.
We're not experts.
I have no idea.
We'll have a guest on. We'll bring Kyle on, or we'll bring Mike Dudas on. There's a lot of bets.
Pepe.
No, that's
which one?
Pepe.
Yeah.
Peter Thiel just invested in penguins. Peter Thiel just put a sloth of money into penguins. Seriously. I don't think you have to look
saying names. Are you just throwing names out there, Perlman?
No, I'm just saying.
I'm just goofing. Pepe Coin. I just love Pepe Coin.
Mm-hmm.
I love Dog with Hat. The sillier the names, the better. It's like you're going to the Kentucky Derby. You're going to bet on a horse. You have no idea how to bet on horses. You pick the crazy name, right? Dog with Hat, Pepe Coin.
Pepe's back over $5 billion.
See my point? That's my point.
$1 billion. Think about that.
No, but
this chart is one of the most interesting charts in the world right here. Solana, Ethereum. I got one more for you guys. It's a Jeff Hirsch special. And this is just simple. And this is the reason why if you could throw up those two charts, here's the reason why I'm going back to this. Because right now we're making all-time highs in noise, right? It's an insane world that we are in. The left is talking about the right making up conspiracy theories. The right is talking about the left making up conspiracy theories. But meanwhile, price is the thing that pays, if Brian Shannon was correct all along, right? So we look at price. And so we look at these charts and we see that election years tend to be bullish years. Pull out whoever's running, pull out any of the rhetoric on one side or the other. And, you look at this top chart there, and that red is all election years going back 75 years. It tends to be a bullish year, 7-8%. This year has been an insanely bullish year. And so, what do you get? And in addition to that, take a look at next year. The year after election years also tends to be a strong year. There's that bottom chart, post-election years. So I am completely ignoring any rhetoric. Biden isn't dead, and the shooter was not put there by Trump to drum up support. All of those stories on both sides are pure insanity. They're all noise. They're all meaningless. Here's what we do know. We know that election years tend to be bullish years, up 7 to 8%, and the year after. And so if we're going to get our little pullback here, July into October, that may be a great buying opportunity. JC, I'm really curious to hear what you have to say about that.
Yeah, I mean, historically, it's better when you're going in with an incumbent president going into the re-election. That's no longer the case. So, you can when you take those out, the numbers won't be as strong. Seasonality, where does it fall in the in the list of most important things that we look at? It's not really near the top. I'm more interested in the sector rotation that we're seeing, right? There's more opportunities now just because it's not the same opportunities that you had earlier this year. There are different opportunities, and that makes some people sad. That's actually a good thing for the overall market, is that the opportunities are different. You're seeing Sherwin-Williams, near the top of the relative strength readings, right? This is a materials, chemical, paint company that gets, looped in with home builders, which is why it looks a lot more like the home construction index than it does the chemicals index or materials in general, right? Because it trades with home construction, Sherwin-Williams. So they're just new names. There's a lot. Financials continue to show relative strength. Industrials continue to show relative strength. Look at the Dow Jones Transportation Average hanging in there great. Look at the Aerospace and Defense Index. Look at General Electric, which is now GE Aerospace is the name of the company now. It's the artist formerly known as General Electric. And because they spun off healthcare and all those other things, they're more pure play in aerospace, which is why they're the largest component of the Aerospace and Defense Index, which is making new all-time highs. And it wasn't before because it was less of a pure play because General Electric had so much shit going on. But now that it's more aerospace, it's a big component of that index. Look at Lockheed Martin also. These things have been ripping. So it's just different stocks. There's nothing wrong with that. Perfectly normal in a bull market.
LMT looks fantastic, by the way. Okay, so let's move on and talk about CrowdStrike, because I think we have some great takes here.
Well,
go ahead.
First of all, I have a little extra time today. I think we should talk about CrowdStrike because but let's just refresh. We've shared a lot of ideas so far today, Phil. So I just want to get back to takes. If you watch this show, we were joking around last week. It was a shitstorm for bears. Okay. And so we've dealt with that. Probably shouldn't say stuff like that. We were having fun. Just when you start seeing stuff like that, shitstorms break out, actually.
It was a shitstorm for bears. We had the most amount of stocks in the New York Stock Exchange above the 200-day moving average. It was the biggest shitstorm the whole cycle.
For those people that want to take a set of construct, I want to show that we come back to these things and try and explain them the next week. What we have shared with you is some incredible ideas, assuming that a correction picks up in tech. So we come back to explain financials, gold, crypto, that's all ETH. That I will also bring up some charts we talked in the past. MMYT, which we talked about in the past, continues to crush. Solana, which we brought up in the past, continues to crash. New York Times is getting to that point. It's 55, JC. I think it's getting through that number. So even though there's been this little correction, and I think this correction came from both this AI leak, this $5 billion loss, and CrowdStrike. So now let's hop into CrowdStrike, which I think is a fascinating story that Mike, you've done a lot of reading. So let's just rip through what we're learning, what we're seeing. Because it hasn't slowed down cyber. Checkpoint's all-time highs today. So and the hack ETF was barely down. So let's talk about CrowdStrike and what went on.
So number one, glass half full. This was not a cyber attack. This was not a terrorist attack. This was just a failure of some software in a very complicated world. So I would say there are three takeaways from my perspective. Number one, it reminds us again that software and IT is a very complicated ecosystem around the world. The companies, when the new stuff comes along, don't go and rush and rip out the old and buy the new. They layer things on. So here what happened is a security software from a company called CrowdStrike, which is about a decade ago totally changed the world, the way companies monitor for threats from outside. And CrowdStrike is a software that literally is about 15% of the world's security software market. Didn't exist about 13, 14 years ago. So they made a lot of headway. They put out a patch, and that crashed about 1% by Microsoft's account, about 1% of Microsoft's Windows installation of 850 million PCs around the world. That's so it was a small number. The bad news was that those computers ran pretty much everything in every industry imaginable, from airlines to hotels to financial bank stocks, etc. Everyone had Windows machines and CrowdStrike that were affected. And the way this software glitch worked, to fix it, to CrowdStrike's advantage, they were able to fix it very quickly, the patch. They said, holy moly, we got an issue. The problem is, to fix it, every IT manager in the world, company large or small, had to go and fix the computers manually. And that's taking days and weeks, and that's why there are repercussions everywhere. So number one, it reminds us that we're living in a world of multi-layered software. Number two, this also brings out the point that regulations have unintended consequences. After this came out, Microsoft said, hey, by the way, guys, in 2019, the EU made us open up our Windows operating system at what's called the kernel level, which is the deep innards of the operating system, and give access to it to third-party companies like CrowdStrike so they can do things and add value. They didn't want to do it, but they did. Interestingly enough, CrowdStrike did not impact any Apple Mac computers or Linux because they don't give kernel level access. And here, the good intentions of the regulators, which is to open up the market, actually created a vulnerability that you had Windows basically give kernel access to third-party companies. And so the good intentions, it shows you, again, regulation, just like anything else, is a double-edged sword. Sometimes you have bad things that happen. And number three, the point I made in my write-up is that all of this is pretty much going to be fixed. It's all going to work again. But as we talk about AI software is a whole different type of software, as I've written about and talked about. It's probability-based, as opposed to deterministic software, rule-based software. And as companies basically put on AI software, it increases the complexity of the software world over the next 10 or 15 years. So get used to this. Get used to the notion that sometimes looking at the intricacies of a software glitch here or there can bring down a lot of things. And that's the bad thing. It's like, in my way of looking at it, it's like, look, beaches are wonderful in Florida until you have tornadoes. And when they have them, it's a mess. So it's like Twisters, the current movie in the theaters, the sequel.
They're called hurricanes, Michael.
Exactly. And look, I that's why I need help. Or tornadoes, hurricanes. Exactly. So the point is, these things happen. They're blue swans. When they do, they're terrible. But it doesn't mean that the world's coming to an end.
But what I think so everybody should read Ben Hunt's piece. I think he made it free about how Microsoft may use this, and then
Ben Thompson.
Ben Thompson, sorry, and Marshall and Matthew Prince, the CEO of
CrowdStrike,
Cloudflare. No, he was CEO of Cloudflare. And they're about $60 billion company. He came out and said, "Be careful of what Microsoft tries to do here to capture regulatory capture based on this, which would be 10 times worse." So there's a lot of manipulation that'll go on behind the scenes. So this has been setting itself up for a while. It's a reminder of how fragile this is. The question is, Michael, is CrowdStrike technically, JC, pull that up? Because technicals don't matter as much when there's as much news as this happening, or so. Knowing this, JC, does that change how you would look at this stock technically if we pull that back up?
Knowing more about the disaster that is CrowdStrike? No, for me, the less I know, the better. It's got work to do. I mean, this could be like a Boeing situation. This could be a lot of different things. So I wouldn't get in front of this train. Talk to me. We start getting back above 300 to the upside, then come talk to me. That could take days, weeks, months, quarters, years. Who knows? Maybe he never does that, right? So, but talk to me above 300, and then maybe the sooner it does that, the more I'll be interested.
Short term, Michael, here's my...
Love that.
Go ahead, Phil.
Here's my question for you, Michael. Is this fixable? Because I'm looking, so I do care, JC. I love the technicals, but I also love the story. And so my question is, I mean, CrowdStrike has not completely broken down here, right? I mean, this was a hell of a setup coming into the shit storm or the hurricane. And it has not, I mean, it's down another $7 today from this chart, or $8. So it's getting there. But that's a thick gray line of support and resistance that JC drew. And so my question for you, Michael, is this a fixable situation? And can they get, can they fix the, can they fix this and right the ship here?
I think so, because this is not like a Boeing situation. Boeing had a series of systematic issues from a quality control point of view that they're still working through, a whole bunch of reasons in terms of private equity-based management and other issues. CrowdStrike, this was an honest-to-goodness software glitch. It happens, and they fixed it. Yes, there will be opportunities in the near term for companies like Microsoft, as Howard, you mentioned, that Microsoft will be able to say to regulators, "Hey guys, don't make us give access to the kernel level to third-party companies," and that'll be pushed back against, I'm sure, because in the case of Microsoft, there are advantages to having companies like CrowdStrike being able to monitor things. And by the way, there will be opportunities in short term for other companies to try and Palantir, et cetera, to say, "Hey, we've got products," or Palo Alto Networks, et cetera, to say, "Hey, we've got products that are better than CrowdStrike." But I think this will likely be forgotten. There will be better procedures in place. I'm sure CrowdStrike will make sure next time they have an update, they test it in sandbox environments and all these. There'll be better operating procedures, so it won't expose the world to this kind of a thing. This was a once in a blue moon type of a glitch that affected so many things accidentally. They will make sure their processes are better. So I think this makes the world of software overall generally more alert, better. And I don't think this is necessarily a thing that says, "Oh, CrowdStrike is over." CrowdStrike is over kind of thing.
Okay. I think we kind of beat that for now. I will also say, we got Riley joined it. I will say the other thing that's going on during this little tech correction, it could be CrowdStrike related, it could be news related with the president, Kamala, it could be just the jockeying, the OpenAI news, $5 billion. It could just be a pullback. Right now, as I speak here, the show up a lot more. You got Amgen all-time highs. You got iSearch, Intuitive Surgical all-time high. You have United Healthcare all-time highs. Obviously, in many ways, they are tech companies now too, especially Intuitive Surgical, Robotics, and Amgen, which is a biotech company. So, so it's just, there is this unbelievable lift underneath this market. These are not small companies, United Healthcare, Amgen, Intuitive Surgical. So, it is not just Bitcoin gold. There is so much, there's such a bid under here, under this market, even at these valuations and even with interest rates this high. So I don't think the real news is hit. So it's a really fascinating.
To JC's point, rotation over correction. Small caps, they had a 12% move in a blink of an eye, and they're only off 1.5% from their high, even into the carnage today. So they barely pulled back.
The relative strength is there. Look at the laggards, the relative strength in small caps, the relative strength in, by the way, not only did the Russell 2000 hit new 30-month highs, it was both small cap growth and small cap value, both of them hitting new 52-week highs at the same time. So it's very, very broad. So the fact that we're seeing that broadening participation on the New York Stock Exchange should not be surprising at all. I'll also point you to transportation. So like regional banks and small caps and biotech, transportation, the Dow Jones Transportation Index and transportation in general has definitely been a laggard, one that we've pointed out here before, very well known. Take a look at what that looks like. Looks like an uptrend to me, looks like an upside resolution. And one of the things that I like to do personally that I get a lot of value from is going at and actually looking, right? Just look at what is going on inside of the Dow Jones Transportation Average. Yes, it's 20 stocks. Yes, they're transportation stocks. But what are the components doing that are going to drive that index? Well, scroll down. I just brought a few with me. Look at CSX, great example of a railroad making higher lows, higher highs. Norfolk Southern looks very similar, by the way. Look at Landstar, just keep scrolling down, go one by one. These are uptrends looking to resolve higher. Old Dominion, one of the biggest winners for a long time, continuing to act well. Federal Express, pushing up against new highs. Expeditors, similar. Look at Madsen on the shipping side, already making new all-time highs. Uber making new all-time highs. Let's remember that Uber is a component of the Dow Jones Transportation Average now. As of February, they kicked out JetBlue. And then finally, I wanted to bring out SkyWest because all the airlines in the transport suck. Go one by one. They all look terrible. Delta's the least shittiest one, and it looks terrible. SkyWest, I don't know what kind of racket these guys got going on, but SkyWest looks a hell of a lot better than all those other airlines. So big ups to Sky W. Take a look at that, making new all-time highs. And then keep going. You can see the aerospace and defense making new all-time highs as well. General Electric driving that. You're seeing it.
Hey, JC, are the regional banks out of the woods? I mean, since Silicon Valley Bank shares went up and, there was that whole like, hey, this is a systemic problem in the financials. Is KRE out of the woods?
It's not so much that it's out of the woods or was ever in the woods. I really think it was just an interest rate story. And we thought it was, and we thought that the higher rates were putting pressure on small caps in general and the relative weakness there, biotechnology, regional banks. To me, it was all the same thing. And now that we're seeing a bid in bonds and those rates rolling over and how well these stocks are acting in that environment further reiterates that, yes, in fact, that's what it was. It was an interest rate situation because as interest rates have come off, you're seeing a bid in all of these names. So I think it's more that. And if the market wasn't doing this, that would be contradictory to that. But the market is just confirming what we thought.
Well, it's also, those don't go away. Those are still on the books as losses. They're just not realized losses. So you still have $500 billion. Well, they're carry losses. They're trade losses. They're just not being forced to take those losses and be bankrupt. So we are holding those losses somewhere.
I'm not sure what losses you're talking about. What do you mean losses?
Well, but they were buying, their interest rate trade is still fucking a loss. They just have, the government's just kind of.
Oh, you're talking about the debt they have on their books.
No, I'm talking about their carry trade, right? They lent you money at 2% and then went out and did stuff at 0%. So meaning, I'm going to avoid that sector when there's so much good going on because I don't really understand. That's still fake. That's still a loss.
Yeah, but they're moving tick for tick with biotech. So are biotech's fake too?
Yep. Everything's fake.
It's the same. It's an interest rate story. Interest rates go down, those stocks do well. Interest rates go up, those stocks are under pressure.
But but what I'm saying is, you're right. It is interest rate driven. As rates come down, those losses that no one is talking about right now shrink. So keep going.
Riley Roseby is here live from the Olympic Village. Are you competing, Riley? Are you competing in the 2024 Summer Olympics? Are you made the basketball team?
I'm just
You're doing
fan.
400 hurdles.
I'm about a foot too short to play basketball.
You're pretty. You got some hops, man.
I mean, I'm 6'3", but I'm still a foot short to play basketball.
I've seen you dunk.
No,
with
you
authority.
just gotta rep. You just gotta rep the hometown team. Team USA.
Riley, that 92 Dream Team, I was 10 years old. It was literally the greatest thing that could have ever happened to me in my life. At that point in my life, all my favorite players on the same team, just abusing everybody all over the world. It was 10-year-old JC was just in a dream. It was amazing.
Can you remember exactly where you were when you were watching those games?
I remember being in my parents' living room, like in my house that I grew up. I mean, I was 10 years old, so I know exactly where I was. And, it was always like a weird times. Oh my God, I'll never forget that. What a great Michael Jordan, Magic Johnson, Larry Bird, Ewing, Barkley, Robinson. I mean, it was all my favorite players, all on one team. Kicking everybody's ass. Oh,
it's a classic.
Barkley throwing it off the backboard,
So, Riley, we're looking forward to seeing you on the court. But in the meantime, the beauty of what you do is you find these undiscovered gems, utilizing both your knack for strong stocks and StockTwits data. And in this case, we're looking for underfollowed stocks that are performing well. It's trends with no friends. What do you got for us this week, bro?
So this week, I mean, we've been talking about a lot of regional banks, which I'm glad JC just touched on. But for today, we're going to look at TE Connectivity, which is a $46 billion Swiss bank electronic component and sensor manufacturer serving the automotive, industrial, and telecommunications industries. The stock has less than 700 followers, which feels criminally underfollowed given its nearly $50 billion market cap. And this morning, as we're recording this Wednesday, July 24th, the company reported Q3 earnings, beating EPS estimates and announcing record year-to-date cash flow. I think more importantly than the earnings numbers, though, is the stock is up about 4.5% in a down tape. If we look at that daily chart, it's running right into 52-week highs. And then we can zoom out to that weekly chart and see that it's starting to hit overhead resistance at its all-time highs from Q4 2021. So I think just to reiterate, it is super positive to see the relative strength of the stock up nearly 5% as the NASDAQ 100 is down 3% and the S&P 500 is down about 2%.
So it's kind of a semiconductor company. Okay.
Yeah, Michael, do you have any experience with these guys?
I do not know a lot about them, but when you said components, etc., they seem to do very, much in the IT infrastructure bucket. So it totally makes sense in that context.
Looks a lot like the XLC. You know what it'd be, which is the communications index. You know what I'd be really curious to see, Riley, is the you're saying how this is an underloved, underfollowed on StockTwits, which is one of the reasons it came up, and I'm fascinated by that. I would love to see a ratio of the followers relative to the followers of other ADRs, or perhaps maybe relative to the followers of European ADRs more specifically. Like, that would be really cool.
I like that.
Right?
I'll dive into that.
Because, like, when you compare a Swiss, infrastructure play compared to IBM or whatever, like, that's just not fair. So I'd love to see that.
Cool. No, I'll send you some stuff.
And from a trader's point of view, you watch the levels, right? I mean, you have that all-time high going back to late 21, and you have this band that you've drawn of where support resistance might become support. And it defines a trade if we get above that level. I mean, I'm no big trader anymore, but I do know how to read that. And it provides a risk management opportunity where, hey, we get above that level, you set a stop at that level or right below that level, and you've defined your risk.
I mean, I think even if you wanted to get in today here on earnings day, setting it below 150 or even using today's low, which is at like 152.5. Like, these are some good levels to use, because if we retrace this entire move after this earnings announcement, like, that's probably not a good sign. We don't want to be involved.
Beautiful. Thank you so much as always, dude. And the more we get you on doing these, the better, because it just feels like one gem after the next. We won't even do the Roper, but that's another one to check out. So let's finish with this. The DGEN economy, we've been talking about it forever. Howie has this DGEN index that he's been doing. You've been doing it for a little while now, right? You've been doing this for what, like since early in the year?
No, since May. I set it up in May of last year through Company Thematic. So I'm just running it as an experiment for people that want to follow kind of my ideas, just not have to stock pick. So it's not very active. I think it has about 15 stocks.
Yeah, we have it there. It's got like Deckers on there. It's got DraftKings. It's got Hennessy. It's got MGM.
Hennessy.
I know, right? Isn't that hilarious?
the two key entry points to the degenerate economy. Well, there's three right now. There's Coinbase, there's Apple, and there's Google. Because the phone and the platform to speculate are part of that. So there's Robinhood, there's Coinbase, there's Apple, there's Google. So it's heavily weighted towards Apple, Google, and Coinbase and Bitcoin right now. And luckily, those have been correct. There was a heavy weighting to DraftKings, the puts, and sold some as it's run. But basically, what I'm trying to do is not take a degenerate from a YOLO perspective. I'm saying, what are the companies at the very center of a world of investors, of a world of global investors, right? And so it includes ICE, which includes CBOE, it includes the CME. These are the people that are going to make money off a generation or two of Gen Z and millennials that are what I call degenerates. And to be honest, like I said today, what pops into my brain are platforms. So with Michael talking about Ray-Bans, if Glass has become an interface for people to be out on the beach to talk to their friends and speculate on Coinbase, then Facebook gets Meta as a company that I may have to add to the portfolio, and I'll take out something that is less degenerate. So I try and use degenerate as just an overriding term for my version of this gateway of a speculation and investing economy. And the two companies that still matter most to me in that are Apple and Google because of the smartphone and because of the iOS. You know, if Musk had taken this $50 billion that he spent on Twitter and maybe came up with a third operating system, man, I think we'd be thinking about Tesla in a lot different ways. I think until we get a competing operating system to Apple and Google's phone, where you interact with maps and your apps and your email and your daily productivity, it's very hard for me to not pick Apple and Google. So you can nitpick this, but it's up 76%, beating the S&P and QQQs since May of last year. Ethan and Riley have been helping me manage this. Obviously, I have an allocation to semiconductors, but because I'm not a semiconductor expert, I've just kind of taken the index. But anyway, you can nitpick over any one or two ideas, but here's a way for people to participate in this economy with incredible businesses. So they don't have to be YOLO like companies like AMC or GME or DJT. Or even meme coins. So anyways, that's all. It's just a fun thing to do. And I think we want to start measuring, now has over a year under its belted track record. And I'm getting more comfortable with how I think about the degenerate economy. And the other thing that I like, I'm trying to teach people how to think here, is you don't have to get too far ahead. I think we've now seen, like with Kathy Wood, it's fun to talk about 10 or 20 years, but let's be honest, investors don't have that patience, especially public market investors, because they're inundated with news about how their neighbor is doing and how your neighbor's fund is doing. So I think great, if you want to try and pick stocks, right, you've got to try and pick companies that are both making money and that have catalysts for growth. Because otherwise you're not going to stay with your company. And so I really think when we look back at this era, and I think Tesla is right at the center of it, they're so close to doing some things that should have put them squarely in a better position against Apple and Google. I think people would use a Tesla phone or, a Elon type iOS. And I think they'll look back on this era. I'd love to, I think if his other company was public, Starlink, that would probably be in the portfolio. But Tesla doesn't make it, even though degenerates love the car, love him. I don't know if you can pull up the inception to date. I don't know why you can't, but there's a web page that we'll share.
Riley, it was fantastic to have you here. We're going to just try to have you back as often as we can. Sometimes it's difficult when we have a guest. I want to give a quick plug to Stocktoberfest. Coronado Island is one of the greatest places in the world. It's going to be the best place that you're going to go. I mean, unless you're going to Switzerland, it's going to be the best place that you could possibly go for a conference in October 20th through the 22nd. I think we're all going to be there. You're going to have Kyla Scanlon's going to be there. If you haven't ever seen her speak before, she's incredible. Brian Shannon will be there. Batnick will be there. There'll be other people there.
Ben Hunt
will be there, who's incredible.
Michael will be there.
Really, the best
Darren
part about
Ravel
it is
will
just
be
hanging
there.
out with the crew, though. Like, just an incredible group of people, incredible venue. We will have great speakers. The 20 through 22nd. Howie, anything else to share about that? You said Ben Hunt?
Yeah, Ben Hunt will be there. Darren Ravel, who knows more about collectibles and degeneracy than anybody, great investor. So a lot of great investors. That's the thing I want to mention for StockTwits users, more than StockTwits had today. It's good to see JC posting there as a legend. But we just launched a massive feature. We've tripled down on earnings, right? For StockTwits, if you love stocks and like talking about them all day long, StockTwits is for you. I think what we didn't do a good job on the last 3-4 years is stay true to that. And so we launched live earnings calls on StockTwits partnership with Quarter. And so starting yesterday, you can listen to live earning calls in real time. And we added a live chat. We StockTwits, gave it a little StockTwits sprinkle dust so it has a live sentiment. It's just new and unique, right? If you're there, you might as well listen to the earnings call. And I see this for everybody, whether you're a trader or an investor, especially if you're an investor. Listen to some of these great speakers. A great time to truly, even if a lot of this downstage, to go listen to the Netflix earning call for an hour here. Ted Sarandos wax poetically about media and about how they're thinking about churn. Or to hear Daniel Ek speak to Spotify, which is, one of the greatest companies in the world, taking on Apple, taking on Amazon, thin margins, and winning stocks, pretty much all-time highs. And then yesterday up 10%. So when you have a chance to go listen to great business leaders in a setting in your native setting, so that's something we launched. There's pre-earnings chat. There's live chat going on. There's market sentiment. And so we're tripling down on earnings. So I think that's a great, simple feature. So if you download the StockTwits app, very easy. If you would just want to go use our StockTwits calendar on the web, very easy. But nice little feature that we added. So thanks for the plug.
Meta next Wednesday afternoon. That earnings call and chat stream will be lit.
I'll be there with my Ray-Bans.
Where'd you buy those?
Online.
Where'd you buy
they send them to you.
Okay.
It's on Ray-Ban.com. Yeah. I don't think it's
but they're sold.
No, you can get different models, and if you can get prescription orders. They fill them. It's not Xbox sold out. You can get them.
I think that'll be a product JC likes. I think Rodney would like it. I
They're
think
cool.
I'm going to like it.
No, I've played with them.
I think my son would like that because the camera. But stock's selling off into earnings, so 460. So it's going to be an interesting week next week. All right, boys.
Thank you, everybody.
Bill, thanks for carrying it.
Adios, kids.
All right, guys.
Michael, thanks.
See you, fellas.